Hey everyone, welcome back to Corporate Decoder. Today, XELL just filed an 8K revealing recent regulatory news, and I'm seeing a nice little boost coming their way. Quick note, this is not financial advice, just my take on public filings for educational purposes. The big story here is a verbal order from the Minnesota Public Utilities Commission that is likely to increase XELL Energy's earnings. Xcel Energy's subsidiary, Northern States Power Company, or NSP-Minnesota, has been in the process of updating its electricity rates. Back in November of 2024, they filed a request expecting a certain return on their investments and a specific amount for their equity ratio, which is like the company's ownership stake. They were asking for rates to go up, estimating about $13.2 billion in their investment base for 2025 and $14 billion for 2026. The regulators, the Minnesota Public Utilities Commission, or MPUC, did approve some interim rate increases early in 2025 of about $192 million. Then in October 2025, NSP-Minnesota updated their request, asking for even more revenue, around $365 million. Now, on the 18th of June 2026, the MPUC finally gave a verbal decision. This is fantastic news for XELL Energy. They are expecting an estimated rate increase of about $211 million spread over the next 2 years. This works out to an average increase of about 2.9% each year. Importantly, the MPUC is allowing a higher return on equity, or ROE, for NSP. Minnesota, they are bumping it up from the current 9.25% to 9.60%. This is a pretty good increase and shows the regulators are acknowledging the need for a better return. They are also keeping the equity ratio at 52.5%, which is good because it means the company is not being forced to take on too much debt or dilute existing shareholders. On top of this, they are continuing existing programs that smooth out revenue fluctuations, like adjusting for the actual amount of electricity sold, and they are adding new programs to help manage costs. The really great part is that XELL Energy is reaffirming their earnings per S-Hair guidance for 2026. This means they are confident that this regulatory decision will help them achieve their profit targets, which they expect to be between $4.04 and $4.16 per S-Hair. This is a positive sign because it indicates that the company can operate profitably within the new regulatory framework. A final written order from the MPUC is expected by the 31st of July 2026, but the verbal decision is usually a strong indicator of what the final order will look like. Now, like any company making predictions about the future, XCL Energy includes a standard disclaimer. They are saying that while they expect good things like the earnings guidance and the rate increases, these are forward-looking statements. This means they are based on current expectations and assumptions, but there are always risks and uncertainties that could cause the actual results to be different. Things like operational safety, especially with their nuclear facilities, successful long-term planning, and even risks associated with wildfires. They also mention commodity risks, which means the price of energy sources like natural gas can fluctuate and impact their costs and revenues. They go on to list a whole bunch of potential risks. These include things like the economy, inflation, supply chain issues, and even cybersecurity threats. They are also watching out for changes in laws and regulations, especially those related to the environment and climate change. Basically, they are covering their bases, acknowledging that a lot of external factors can impact their business. It is important to remember that these are potential risks and not guarantees that anything bad will happen. This report is signed by Brian J. Van Abel, who is the Executive Vice President and Chief Financial Officer. This is standard procedure for these filings. Looking at this filing, the main takeaway is the positive news from the Minnesota Public Utilities Commission. The verbal order granting a rate increase and a higher return on equity is a significant win for XEL Energy and its subsidiary NSP-Minnesota. This decision not only helps the company meet its financial targets for 2026, but also provides a more stable and predictable operating environment. While they do mention various risks, they are typical for a large utility company and are balanced by the positive regulatory news. The increase in ROE from 9.25% to 9.60%, while seemingly small, is meaningful for a company of this size and can translate into substantial additional earnings. When utility companies get favorable regulatory decisions, it often provides a clearer path for investors and can de-risk the stock. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord in the description.